Hey everybody, Boris, BK Forex. Welcome to the weekly technicals for the majors for euro dollar, for dollar yen, and pound dollar for April 9, April to 13, 2018. And the big theme in the coming week is going to be politics versus economics, which has been the sort of driving theme for the last couple of weeks, because we have this massive divergence between the relatively decent U.S. economic picture and certainly one that supports a much stronger dollar than the currently one we're seeing, and much stronger yields than the currently we're seeing, versus the absolute chaos and tumult of the political situation that goes on in Washington, D.C. right now, with a major trade war beginning to brew with China that threatens to undermine the whole economic foundation for the U.S. economy as we go forward, which is the reason why the dollar, despite strong data, despite relatively decent growth, despite highest yields in the industrialized world, continues to lag in the currency market. And we can see this in the charts in just a minute. So as we enter into next week, which is going to be a much calmer, quieter week, the levels for the dollar have kind of moved up and down in certain levels. For the euro dollar, we still remain in this 22-24 range, now at the bottom of the range, but looking very much like bottom picking is the right trade for the time being. So sort of buying the bottom of the range, selling the top of the range has been the trade for the last month and a half, and continues to be so according to the charts. With dollar yen, we've made a tentative bottom, but it still remains very much under threat. And this 107 level, which has been such a hard level to overcome, that is to take out and maintain, remains elusive for the time being. That's going to be the really critical pair, the really critical level into the next week. I'm going to be watching the 107 level like a hawk, because right now we can't hold it as we go into the close of the New York Open. And if we can't hold it any further, it's very likely we could revisit the bottom, which seemed just last week to have been a very, very decent tradable bottom from which we could have traded dollar yen to the upside. And pound is really holding its own, despite the fact that UK data continues to be really, really wobbly. But the market, I guess, is having a lot of positive expectation about developments with Brexit, about the idea that most of the UK data was really weather-centric, and the fact that the BOE is very likely to begin tightening policy in May. So the pound for now looks to be 140 bid quite well. It withheld a couple of rallies against it at that level, and now looks to be tradable back up towards the 142 level. Now the calendar is much calmer and quieter this week. Literally, there's only one key event this week, which is the inflation data out of the US. We have the PPI on Tuesday, the CPI on Wednesday. CPI is going to be much more critical. And that's going to be essentially it as far as the majors go. There is a smattering of trade balance data and manufacturing and industrial production data out of UK. There is University of Michigan sentiment data on Friday. And you can see that it's just basically nothing. It's just all really inflation data as the only major tradable event this week on the economic calendar. Now, looking at the charts, you can see what I'm talking about as far as the range goes in the euro dollar. This range has been existent since the beginning of February, and so far appears to be very much holding. At this point, you really have to give the benefit of the doubt the range holds, unless and until 22 goes to the downside and the range is broken to the downside. You have to assume that we now have again a bottom of the range trade with potentially move back up. Now the move here is really not a pro-euro move, but very much an anti-dollar move. And the fact that we've had an engulfing candle here is a relatively positive sign for euro bulls. It suggests that there's more upside to go, and more importantly, that there's really more negative dollar sentiment as we go forward. Nothing, I think, says negative dollar sentiment more than this particular chart here. Look at this massive failure to break out the 107 as we close the week. We're basically closing out here on strong wage data in the U.S. and non-farm payrolls. Yes, we had a relatively weak non-farm payrolls, but it's not catastrophic by any means, and it still shows U.S. economy generating jobs and, more importantly, increasing wage growth. But none of it seems to be matter at this point, as dollar yen just slides all the way back down as risk aversion flows begin to dominate the trade. Now, the only thing I will say is that the only sliver of positive light here is that the move down has been very grudging. There's been a lot of buying at the 107. It took all day long to break the 107 to the downside, and it's still having a hard time sort of sliding to the downside. I think as long as 106.50 holds, for the next couple of days. There's still much greater potential the dollar yen as a buy than a sell, but it certainly leaves dollar yen bulls with a lot of skepticism to be watching this particular trade unwind in front of their eyes. We've failed at 107 2 or 3 times beforehand, and if this failure becomes supreme, in other words, if we just move all the way down to 106, that's going to find a lot of dollar yen bulls trapped, and the trap could really push us all the way back down towards the 104, 105, 104 level on a test. Overall, I still think if you look at this with a cold, sober eye, it's a nice rounded top. You have essentially a beautiful W top or a inverse head and shoulders, however you look at it. This is the key level against which you're sort of holding the longs, the 105.80 level. As long as that low holds, it's still very much an uptrend. But the fact that we've basically reversed all of the moves from yesterday, which was a very bullish breakout move, couldn't make it beyond the 107.50, is troubling. And I think you would need to see a day or two next week where we close above 107.50. Of course, the biggest problem here is, again, what I was talking about, the politics versus economics. On an economic basis, we should be just marching straight up. We could easily have probably made 108 today if there was no political interference in the picture. But because every day is political interference day in the FX market these days, this becomes a very treacherous trade. And I think you really need to see the prices confirm, at least for a day or two, that sentiment is turned back to positive before you can get confident the dollar yen has a chance to really rise through the 108, 109 level. As far as the fundamentals go, it certainly has the scope, but it's really being sabotaged by the political news. And then lastly, here's the cable trade, which is very impressive because we have basically a bullish engulfing candle here to the upside. We hold the 140, and now you have a relatively small amount of risk against which you can hold. So you sort of, if you get long here and with a 39.75 stop or 39.50 stop, probably that would be the ideal stop. You have a reasonable chance here that we might be able to trade up to 41, 42. Again, primarily on anti-dollar flows, not so much pro-UK flows, but it's impressive that the pound has been able to really rally today after pretty much a good week and a half of distribution and selling. This may show that the longs who had hoped to break the back, the short who hoped to break the back of the 140 level just got trapped, and now they're getting squeezed out. And there may be more to squeeze them higher as we go forward. So that's kind of how things look. To me, the single most important level is the 107 level in dollar yen next week. It needs to hold that, close at really 107.50 effectively. And then the peripheral stories are, does the euro trade back up towards the 23.50s? Does pound come back up towards the 142s? Really much more on anti-dollar flows than anything else. That's how the week shapes up. I wish you guys the best luck, the best trading. Boris Schlossberg, over and out.